Okay, everybody, it's me, Gregory Mannarino. It is Sunday, April 3rd, 2022, and this is my newest segment of Markets A Look Ahead, and we are going to look ahead. I want to bring one thing to your attention right here and right now. How many of you know what short interest is? Well, if you don't, I'm going to tell you. Short interest is the amount of investors and traders who are now betting against the market. This is important because generally when you see short interest increase, like we are seeing now, that is a bullish sign. Yes, you heard right. When people start to bet against the market in greater and greater amounts, nearly invariably, it means the stock market is going higher. So, I want you to be aware of that. Over the past several weeks, we have seen increasing short interest. Now, to me, all right, it appears that this market is in fact setting up for a move higher. It's very simple to understand the dynamics here, people. You all know this better than anyone in the freaking world if you follow this blog. In no way, shape, or form is easy money going to stop pouring into these markets, nor are reasons to throw more money at whatever they want to throw money at. They're going to be created magically, just like, dollars created out of thin air. And this mechanism is very bullish. There are a lot of other things that are going on too. But for the market, we'll cover these in a moment. But for the market, it wants to see much, much more debt be just magically created out of thin air. It wants to see more reasons for debt to expand. That's it. That's the driving force behind this freak show market, and you all know that. So understanding that mechanism, it's very, very simple. And now that we're seeing short interest increase, people, look, I hate to sound like a permabull, and I get called a permabull every day of my freaking life. But this is bullish for the market. We'll see how it plays out. There's another factor here that we need to consider. April generally is a good month for the stock market. Now, look, you understand the propaganda, and let me just put a little light on that for you. We are in a propaganda war with China and Russia more specifically, okay? And what does that mean? You're going to hear more very tall tales being told about how strong our economy is, how we are booming, we're firing on all cylinders. It could not possibly be better for people. Meanwhile, inflationary pressures are off the freaking Richter scale. Real wages are cratering at their fastest pace in history. American citizens continue to borrow and borrow and borrow and borrow some more. And it's kind of funny. At the end of last week, we heard about personal spending. Oh, personal spending is going up. This is a sign that people are strong. Are you kidding me? People are simply having to pay a lot more for things than they were just a year or two ago, and it's going to get a lot worse. As a matter of fact, we got a warning from U.S. farmers. First of all, I'm going to give you one guess, and I think you already know. Who is the largest owner of farmland, I think, in the world at this particular time? Who is he? Who is it? Well, maybe you can enlighten other people. I think you already know. I'm not going to tell you. Just look it up for yourself. Anyway, U.S. farmers are warning of much higher food prices. Why? Because their costs to produce it are skyrocketing. So, look, people, this plays right into what you and I already know. If you believe that you've seen it all, that inflation is miraculously just going to vanish, because it's really transitory, you have no idea. The lie that has been told by the Federal Reserve from day one, that you and I called out from day one. Look, I know about myself, and I believe you as well. We covered it right here in this blog. There was no way possible on the earth, off the earth, or any way out, where else you want to go, that this had even the slightest shred of truth to it. The Federal Reserve knew right off the bat that inflation not only was not going to be transitory, but was going to surge much higher. They knew it and they lied. They continued to push that lie. As a matter of fact, the European Central Bank just last week was still on the transitory narrative. You gotta be kidding me. I can't believe there is a single person on this earth that is buying it. But no one's being held to account, and no one will be held to account. And you know how it works. There's no representation anymore. It's literally every man and every woman for his or herself in this environment here. But that's where we're going. So anyway, just looking ahead here at this market at one thing just so far, because I have more stuff I want to talk about. When you see increasing short interest in the market like we're seeing now, bells and whistles, bing, 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 should start going off in your head. Looking at seasonality as well, like I told you, April is a bullish month. I mean, look, none of this is written in stone, but as market participants, as speculators, what are we doing here in this market, you and me? All right, we're speculating on what is going to happen just by trying to put together pieces of information. But you always have to understand, the issue with the markets, or anybody like myself who's an analyst, who tries to take in the data and put it together, it's a game of incomplete information. And information that is always changing. So you have to be willing to bend a little bit as things move. And for the most part, again, we're going to be correct. We're never going to nail it all the time. It's an impossibility. But just by putting together dynamics like we do here every day in this blog, we can have a really good perspective on how things are going to play out. Now, with that said, let's look at a few other things. More specifically, the debt market. Now, I want to cover something again. If you were to turn on, I don't know, one of the financial channels, probably even this morning, you're going to hear more talk about the yield curve and yield curve inversions and recessions and everything else. I think what people are not being told, and of course, people are always distracted. They're told to look here when they should be looking over here. Is when you do get a yield curve inversion, or this 2 to 10 inversion that everyone's been talking about, generally people were looking at, a year out before a so-called recession hits. But I already told you, a recession would be a move higher from where we are now. Our economy is in free fall around the world, and central banks are going to continue to fuel the debt bubble. And again, look for reasons and create reasons to throw more cash at everything, okay? In collusion with puppet governments. And who's paying the price? Well, it should be pretty obvious. It's we, the people of the world, who are paying for the price of, I'm not going to say monetary mismanagement, because this is all by design. And everything we're seeing has been thought out before, and we're just living the side effect of it now. We are in the middle of the largest wealth transfer that the world has ever seen, and a demographic shift like we have never seen before. It's really the truth. We are, in fact, well on our way back to a feudal system. The three-tier society is a new concept, which came about when the forefathers of this nation got together and said, you know what? We're sick and tired of living under the rule of a king or a queen. We're going to allow the people to govern themselves. And then all of a sudden, that whole thing got twisted, way out of control. But that was the premise of a free nation. Is a people that can, in fact, govern themselves. But as we all know, this got corrupted, and we now have no representation at all. We have a one world government, and that is the central banks of the world. Anyway, people, we need to keep our eye on the debt market. All right, forget about yield curve inversions notwithstanding. As a matter of fact, I want you to ignore it. I want you to pretend that you never even heard of a yield curve inversion. Okay, we've seen this before, and the market keeps going higher. The market is going to be fed epic sums of more debt to prop it up. So forget about all of these freaking crybabies out here every single month calling for a market crash, and they've been wrong 100% of the time. They've never been wrong right once. Not one time have they been correct. And some of these people have channels bigger than I do. It's a pretty astonishing thing. People are just being led astray, and they're part of the propaganda as well. The fear campaign. I don't want you to be afraid of a damn thing. What I want you to be is aware of what is going on. As a matter of fact, I did an interview recently with George Gammon. I love George Gammon, a very smart man, okay? I'm going to place a link to the interview I just did with George Gammon in the description of this video. Once you finish this, I want you to watch that. Between this video and the one I just did with George, I think you're going to really appreciate stuff that you hear there. And I believe you'll come away with a better perspective. So like I was saying, ignore the yield curve inversion. I want you to look at one thing. Okay? That is the 10-year yield. The 10-year yield, people, is the benchmark. That's what everyone is looking at. And that's why I want you to look at it too. By understanding, look, for a very long time, I've explained to you, we've discussed it right here, that we would see the 10-year yield settle above 2%, which it clearly has at this point. If we were to drop below 2% now, it would take a pretty significant event, some kind of an outlier, all right? So we have now settled above 2%. I also told you the market would love it. It would get all orgasmic over it. You know what I'm talking about? I think you do. So, with that said, the setup for the market is really not bad. Crude oil has come down a lot. Energy prices have come down. It's not going to last. It's not going to last. So, be prepared for that too. Much higher energy prices. And with regard to food, don't listen to Greg Mannarino, who's been warning of this, or even the mainstream propaganda. Now we have our farmers warning that food prices are going to go up much higher from here because their cost to produce it is going higher. Anyway, that's the situation, people here. Look, we're not going to stop what we're doing. We're not going to deviate from our plan at all. We're going to continue to bet against the debt, become your own central bank, hold hard assets. We know the game. We're going to allow, because we can't do anything about it, JP Morgan and other mega banks to rig the market. Let them do that, okay, to the downside. There is no price discovery at all with regard to precious metals because the hard asset derives value from a derivative. It's upside down. So good, let them play their game. We're gonna keep buying this stuff, okay? We're gonna keep betting against the hyper bubble in debt. It's a time bomb. It's just gonna go off. But again, we can see when it's happening by watching that 10-year yield. When we start to see 2.5%, 3.5%, 4%, rapid, boom, 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 in rapid succession, we know that's the big one. And then we're going to see the stock market crater, and a massive amount of cash is just going to move from one set of assets into another. That's the setup. And it's as a matter of fact, George and I spoke about this in that interview. So it's, again, worthwhile for you to pay attention to. Again, link in the description of this video. We also spoke about cryptocurrencies. I again explained how I believe when we do get that debt market implosion and we see that tsunami of cash moving from one set of assets into another, a lot of that is going to go into cryptos too. And we're going to see the market cap or market capitalization of cryptos balloon. Anyway, it should be very simple to understand. And this is why, look, I realize that a lot of you don't like cryptocurrencies for whatever reason you may have. But what's wrong with having a little bit of it in your portfolio? Just a little bit. It's very simple to acquire this stuff. I mean, the easiest way I can think about is Coinbase. Go to Coinbase and you can buy this stuff. And like I said, look, There's no reason for anyone to be all in on any one asset. And I frankly get sick of it when I hear people, oh, I'm all in on this and I'm all in on that. You're in the wrong spot. You got to be diversified. You got to be spread out. And that is kind of a safety net for you. For me, it's very, very simple. I am in this market as deep as you can possibly be. I am looking for every opportunity to add to my core positions. You want to know where Greg Mannarino is? What positions he's holding? Go to my website, traderschoice.net, Gregory Mannarino stock picks. Please look at them. It's all there for you. I got long term. I got short term. If you are a subscriber to my free newsletter, you just got a pretty big piece of news. I put my crypto positions, what I am holding right now, from my largest to my smallest position. So again, I'm urging you to subscribe to my free newsletter. People, I really can't imagine that there is another guy out here who is more, I am an open book. Anyone can look at what I'm holding. I put it all out there. I tell you what I'm doing. I explain this to you. My material is available to anyone. 99% of it is for free. The only one thing is my a not so random walk on Wall Street ebook, which I charge like a dog shit fee for. Because I want people to have skin in the game. You know, when people are given too many things for free, they take advantage of it, and they don't care. Anyway, all right, look. With that said, I think I got this all covered for you, and I told you I got your back, and I want to thank all of you who do support my work. I really, you are my base, and it makes me feel like I'm doing the right thing. All right, look, so pretty much that's it, people. We covered a lot of stuff here, but don't stop with this video. Again, in the description of this video is a link to that interview with George Gammon. Go check that out. George is a good guy, and I think most of you, at least here, probably follow his work, and he's a smart guy. With that said, people, look, I love all of you, and I mean that from the heart. Take advantage of the information that I give to you, that George gives to you. Okay, the free stuff that I have available for you all over my website. Free this, free that, free. My chat room is free, and I hope you're utilizing that. My newsletter is free. I hope you're utilizing that too. I'm really trying to make this easy for all of you so we can understand what we need to do, okay? There are those out here that are, in the literal sense, trying to kill us. And they're being very successful. People, the greatest threat to humankind is the hyperbubble in debt right now. Forget about this war or expanding wars or anything else. It's the debt bubble, because we're already seeing a resource problem, okay? And meanwhile, the debt bubble hasn't even burst. When the debt bubble bursts, it's going to be biblical. We're going to face a resource problem that you're not going to believe. And it's going to change the entire landscape of the world. And believe me, they're already getting ready for it by control mechanisms, seeing who will comply and who will not comply. You, if you follow this blog, you are definitely part of the resistance, and you will not comply. And that makes you a threat. And that makes me a threat too. You understand? We gotta come together, people. We got to. We have each other. It's really all we have. And, you know, look, in this kind of an environment, we got to get more people involved. We got to at least try to do that. And some people, no matter what you do, they're not going to listen to you because they're stuck in some kind of an alternate reality which has been created for them. But the fact of the matter is, you and I can see a little further down the pike, and it's not hard to understand. All you have to do is have one eye open, just one. You know what I mean? And maybe, you know, listen a little bit. Anyway, all right, look, I'm out here. I could keep going on. I am going to the Nationals today over here in Las Vegas. I'm going to go watch the NHRA Nationals, and I love this stuff. I hope you have a great day. I will see all of you in the morning. I'm looking forward to it, and I'm just out of here.